This is the part in the crypto market where people start to lose serious money, and I'll explain exactly how in this video. This is where experience really sets apart people who are profitable and people who lose all the gains they made in the bull market, or they've just joined the gains they've made right now. I've been doing this for 6 years, and veterans know to keep their cool. Meanwhile, newer influencers or people who don't quite understand the market yet are going to get their followers overly excited, either in the bullish direction or the bearish direction, and get them wrecked. I'm here to help you avoid that and hopefully make decent money in the bear market, prepare yourselves, and absolutely thrive in the bull market. So give me a few minutes and I'll help you make smarter decisions with your crypto assets. And yes, I'll include the exact plays I'm looking for right now and my thoughts on the market as a whole. I do not claim to be the best trader in the world, but I'm up thousands of percent from where I first started. And one of the main reasons this has happened is just my ability to make calm, rational decisions, keep my analysis simple, and focus mainly on psychology and risk management. I want to help other people in crypto do the same, avoid common mistakes, and maybe someday be up thousands of percent as well. And the only way I can make sure you do not buy every single trap or sell before Bitcoin flies to 100K is if you're subscribed to the channel. Do so and I can keep you updated on everything going on in the market. When you zoom out, these things become so obvious. When we take a look at the whole chart over here, we don't even need to go back to 2018 or previous bear markets. Just look at this right now. Price is going up, and we've broken one level here, which is great, but we're straight at resistance, this previous level over here, and there are people calling for a bull market. But those exact same people, when we were over here, were calling for the same thing, a bull market. See, it looks great, price is absolutely flying up, but we've got resistance right up ahead over here, and we're nowhere near from reversing the market structure. Price is coming down here. So one more example, and I think this is actually a much better example because it's almost exactly the same situation, is over here. So we're in a big downtrend and price suddenly starts to go back up. A lot of people call for a bull market as this happens. Looks like price is going up and we may have some sort of reversal, and it keeps going up, but eventually comes back down. You can even see it started to set a trend here. And again, price is going up. We broke this resistance here, comes back down. However, there's so many instances in a bear market where price can go up and get above previous structural levels. So what we actually want to see is consistent breaking of these levels. I want to see this level break. I want to see this level break. I want to see some consolidation here. Then I want to see this 30K level break, some consolidation here, another level break, and slowly set a new trend as price keeps going up. Now, key levels. This 24.5K, basically 24 to 25K resistance over there, extremely important. Then we've got this 30K level over here, very important. Down here, this 18K level as well. Now we're not going to mark too many levels because we're looking at the high time frame right now. Then down here, we've actually got this 12K level over there. This isn't quite established support yet at the 16K level. It's a very soft support. I'm not going to put too much weight on it yet because we could easily end up having this level be just a deviation and the main support being 18K and this being the trigger for a big breakdown. So remember, we're talking about structure. What we want to see is this structure start to shift because look, every time it goes up less than the time before. Every time it goes down, it goes lower than the time before. We had a slight, not very significant high over here, which technically isn't a high because we didn't really make that much of a new low. So it's not that significant to market structure. It's just a weaker bounce off this same low. So we really haven't seen much structural shift at all. Maybe once we break this level and this level, we'll see some shifts. And I'll talk later about the bigger picture for long-term investors, but I want to focus on traders right now. Next, there's this concept that I know has been helping a lot of people. Whenever I'm looking for a trade, I mark distance between key levels. So if we were to take a long over here, we've got about 7.5% to make profit on. If we were looking more for short plays over here, before the next key level, we've got about 22.68% to make money on. So one of my favorite things to do is look at how much distance I have here before the first level of major support or resistance. And that helps me make the most profitable decisions. It helps me know that, hey, I probably want to be looking for shorts right now. It's how I don't get trapped over here. I just wait for us to get past this level, then I can start to look for longs, and I actually won't look for shorts anymore until we get back below it. It's why I know when big opportunities come. Anyone who's been following my videos and newsletter knows that when we broke this 18K level, I was very bullish and I was looking for entering a long. That wasn't because I could predict that the price was about to go up. It was because I looked at this and I can see, first major resistance seems to be 25K over there. We've also got one at 21K there. So I've got between 17 and 34% to make money. So if I'm right, I can be really profitable as well. Alternatively, the right play could have been to short. For example, like it's a downtrend. So there's a very good probability that we just hit resistance here and then went down to the next level. However, I didn't like that play because we've somewhat established a bit of a support here. So I'd rather just wait for us to get below this level and then sacrifice a little bit of profit there and take this trade there. Now we zoom into the 1 day. Remember, every time you zoom in, you get more microscopic with detail. The levels become a little less significant, but you get more of them. So now I'm going to mark this level here, and I'm going to mark this 21K level here as well. And you could also mark down here the 20K level, but I'm going to not be looking at that quite yet. I'll look at that on the lower time frames as I'm looking to trade level to level. And this defines the next plays we're looking for. So using that same logic I just shared with you, a long isn't the worst play over here. I personally do not like this long play over here because we've gone up this entire distance without much of a retracement the entire time. So I'm expecting at some point to get a major retracement. And right now we failed twice to get above this 24K level. All of that tells me that I don't really want to take this long trade over here. So immediately I'm looking for shorts because I really know how significant this resistance here is. And I'll look for longs above that. And again, I'll talk about that more later. But for now, shorts are my favorite play. So a really popular play happening right now is the bounce off this level where people are going to try short the midpoint here. Now this works really nicely because resistance gets weaker every time price bounces. So if we come down here and then bounce to here, look, first we bounced that high. Now we're bouncing this high. Price comes down, next time it bounces to here, comes down, bounces say just a little bit above, comes back down, bounces even lower. That shows me that buyers are just stepping in less and less every single time. And when I see that, I think, oh, this level's probably going to break soon. And if it breaks, how much distance do we have? All the way down to here. So what you can also do is if your idea is that buyers aren't stepping in, when is that idea incorrect? Well, that idea would be incorrect if we got to, say, the 24K level. And now you have an invalidation stop loss. So you enter your short here, you set your level where you think your idea is invalidated, and you try to make money. That's simple. That's what trading is. You're not trying to predict what's happening. You're coming up with an idea, and you know when that idea is no longer valid. Now, my preferred way is to be more reactive than predictive. So I like to wait for big breakouts when there's a lot of opportunity to make money. So right now, this breakout play looks okay. Maybe I can play it on the lower time frames depending on how we break it, if I happen to be around the computer when it happens. But I won't be too fussed if I miss out on this opportunity here, because the big money play from what I can see is this crash down here. Why? Because look, we barely hit any support or resistance this whole way up. And when I see that, I expect the way down to be just as aggressive. So a breakout here is the most profitable opportunity I can see from the short side. Now there will be a time to long, and I'll show you exactly when that is. But whatever opportunity you pick, whether it's the short plays I just shared or the long plays I'm about to share, it's really important to protect your funds. And that's not just risk management during trading. It's also being careful of where you put your money. I've got a crypto security guide that teaches you about cold storage, about using exchanges correctly. And that's actually my favorite way to use leverage. So personally, I only put a small amount of my funds on Phemex, and I use leverage to trade as if I had more funds on there. So for example, you put 10K on the exchange and then use 10x leverage, and that 10K becomes 100K. Now I have 100K, but I only need to put 10K up on the platform. Now anything happens like it's happened with Celsius and FTX and a ton of other crypto platforms where your funds get at risk, well, your damage is severely limited. The other thing you can do if you have a lot of funds is use more than one exchange. Now, I've got a few I really like, and I'm doing my best to negotiate deals with them to get you guys discounts, bonuses, whatever else I can, and give you a way to support the channel as well. So the offer I currently have is up to a $6,000 bonus on Phemex if you sign up using the link below, and you can support the channel as well. Check them out. They're a solid platform that I've been using for years. I also do a ton of giveaways and stuff, hundreds, sometimes thousands of dollars a week for people supporting the channel. I think total I might have done like $20,000, $30,000 right now in giveaways. Now, absolutely every fiber of my being wants us to get above this 25K resistance, because then we've got 13% up to 22% to make money on. This is just like this level over here. We've got a huge run up to make money on. And again, look, big move up, hardly any resistance, probably a smooth move down. Similarly here, big breakdown, probably a smoother move up. And if we zoom out as well, even here, smooth move up, then a smooth move down, probably another powerful move up. And we've also got potential resistance here, because we do see some support happen at this level over here. So that gives us plenty of space to make money with longs if we get above this level. And this is going to be really important for the macro and longer term investors, because this is where the market structure starts to shift just a little bit. Because right now this downtrend has a few key levels I want to pay attention to. Because structurally, this downtrend right here has a few key pivotal levels where the structure really starts to shift. One of them is this 30K level. So this 30K level is psychologically really important. And once we get above this, I would say we're no longer in a strong downtrend and we're more in a neutral trend, because we've got 3 peaks over here and we'll have taken out one of them here and got above a big psychological level. So we've done more than enough to counteract a lot of the downtrend. So we'd now be in this neutral zone over here, which is a little bit harder to trade, but we'll deal with that when we get to it, and there'll be plenty of opportunities there as well, especially in altcoins, because people will be more comfortable trading them. Then hopefully will be more liquidity there as well. Then when we get back to the bullish side of things, it's this level right here. This is the bull zone. People are going to be excited. People are going to be waiting for this big break of all-time highs. We are close to Valhalla over here, and then true Valhalla comes above all-time high levels.